Property and Casualty Practice Note, 2022. 3. Scope. This scope chapter is the second of 4 chapters, i.e. chapters 2 through 5, in this practice note that discuss each of the 4 required sections of the Statement of Actuarial Opinion: Identification, Scope, Opinion, and Relevant Comments, sections 3 through 6 of the NAIC SAO instructions. The Scope section identifies both the reserve items upon which the appointed actuary is providing an opinion, and also the basis for the presentation of those reserve items. The Scope section also identifies the review date. The review date is defined in ASOP number 36, Statements of Actuarial Opinion regarding Property Casualty Loss and Loss Adjustment Expense Reserves, as, quote, the date subsequent to the valuation date through which material information known to the actuary is included in forming the reserve opinion, end quote. The NAIC SAO instructions also indicate that the scope should include a paragraph regarding the data relied upon in forming the opinion, including who provided the data, and that the appointed actuary reconciled the data to Schedule P Part 1 of the company's annual statement. Additionally, if the company participates in intercompany pooling, the appointed actuary discloses this in the scope. This disclosure should include a description of the pool, an identification of the lead company, a listing of all companies with their state of domicile and pooling percentages. It must also discuss how the data used in the appointed actuary's analysis was reconciled to Schedule P, either on a pooled basis or for each company on its own. Scope of SAO. The Scope section identifies the reserve items upon which the appointed actuary is providing an opinion. The reserve items may include loss and LAE reserves, retroactive reinsurance assumed reserves, unearned premium reserves for P&C long-duration contracts, unearned premium reserves for extended reporting endorsements, including, but not necessarily limited to those items included in Schedule P, Interrogatory Number 1 of the company's annual statement, and other reserve items for which the appointed actuary is providing an opinion. These items and their corresponding amounts are listed in Exhibit A, Scope. Exhibit A, Scope, and Exhibit B, Disclosures, are 2 exhibits that are required to be attached to the Statement of Actuarial Opinion. FAQ. Is the appointed actuary required to opine on all of the reserve items listed in Section 3.1 of this chapter? No. The appointed actuary should identify those items that will be included within the scope of the opinion. 3.1.1 Discussion. The appointed actuary should state that the items in the scope on which he or she is expressing an opinion reflect disclosure items 8 through 13.2 in Exhibit B. Note: the NAIC SAO instructions intentionally excluded items 13.3 and 13.4 from the above sentence, i.e., carried reserves for A&H long-duration contract, unearned premium, and write-in items, respectively. This is due to the appointed actuary not being asked to opine on the reasonableness of the reserves associated with A&H long-duration contracts, except to the extent that the reserves are included within the amounts reported on Exhibit A. If the appointed actuary is not opining on certain items in Exhibit A scope, or a subset of those items, then the appointed actuary should clearly state this in the scope section of the SAO. In this case, if the appointed actuary believes the excluded items could be material, the SAO would be qualified, and noted as such in Item 4 of Exhibit B. For further discussion on qualified SAOs, please refer to Section 4.5 of this practice note. Illustrative language. 3.1.2. The following language may be appropriate. I have examined the actuarial assumptions and methods used in determining the reserves listed in Exhibit A, as shown in the annual statement of the company, as prepared for filing with state regulatory officials as of December 31, 2022. The reserves listed in Exhibit A, where applicable, include provisions for disclosure items, Disclosures 8 through 13.2, in Exhibit B. 3.2. Stated basis of presentation. The scope of the SAO should identify the basis upon which the reserves are stated. ASOP number 36 explains that the stated basis of reserve presentation is a description of the nature of the reserves, usually found in the financial statement and the associated footnotes and disclosures. The stated basis often depends upon regulatory or accounting requirements. It includes, as appropriate, the following: A. Whether reserves are stated as being nominal or discounted for the time value of money, and, if discounted, the items discounted, for example, tabular reserves only, and the stated basis for the interest rate, for example, risk-free rate, portfolio rate, or fixed rate of X%. B. Whether the reserves are stated to include an explicit risk margin, and if so, the stated basis for the explicit risk margin, for example, stated percentile of distribution, or stated percentage load above expected. C. Whether the reserves are gross or net of specified recoverables, for example, deductibles, ceded reinsurance, and salvage and subrogation. D. Whether the potential for uncollectible recoverables is considered in the reserves when recoverables are involved, and, if so, the categories of such uncollectible recoverables considered, and whether those categories reflect currently known collectability concerns or potential ultimate collectability concerns. Possible categories of uncollectibles include those related to disputes and those related to counterparties in financial difficulty, credit default. E. The types of unpaid loss adjustment expenses covered by the reserve, for example, coverage dispute costs, defense costs, and adjusting costs. F. When the opinion is only for a portion of a reserve, the claim's exposure to be covered by the opinion, for example, type of loss, line of business, year, and state. And G. Any other items that, in the actuary's professional judgment, are needed to describe the reserves sufficiently for the actuary's evaluation of the reserves. FAQ. What is an accounting basis? An accounting basis refers to the reporting principles underlying the presentation of the financial report. Two common examples are SAP, Statutory Accounting Principles, and GAAP, Generally Accepted Accounting Principles. 3.2.1 Illustrative Language. The following language may be appropriate. I have reviewed the December 31, 2022 loss and loss adjustment expense reserves recorded under U.S. statutory accounting principles. 3.3 Intercompany Pooling. For companies participating in an intercompany pool, the appointed actuary is required to include a description of the intercompany pool in the SAO. This could be included in the scope. The following section discusses intercompany pooling and offers information regarding what may be included in this description. According to the NAIC SAO instructions, for each company in the pool, the appointed actuary shall include a description of the pool, identification of the lead company, and a listing of all companies in the pool, their state of domicile, and their respective pooling percentages. Exhibits A and B for each company in the pool should represent the company's share of the pool and should reconcile to the financial statement for that company. FAQ. Is there a difference between intercompany pooling and intercompany reinsurance among affiliated carriers? Yes. Please see the definition section 3.3.1 below. For companies that have a 0% share and 0 net reserves, the information for the lead company in the pool must be provided. 3.3.1 Definitions. Intercompany reinsurance refers to a transaction whereby one company, the reinsurer, for a consideration, agrees to indemnify the other, ceding company, against all or part of the loss that the latter may sustain under the policy or policies it has issued. Intercompany pooling, in this context, refers to business that is pooled among affiliated insurance companies who are party to a pooling agreement in which the participants receive a fixed and predetermined share of all business written by the pool. Intercompany pooling arrangements involve establishment of a conventional quota share reinsurance agreement, under which all the pooled business is ceded to the lead entity and then retroceded back to the pool participants in accordance with their stipulated shares. In addition to the discussion below, pooling is discussed in Appendix 3.2, as well as in the AOWG regulatory guidance included as Appendix 2. The reader is referred in particular to the AOWG regulatory guidance related to pooling arrangements in the opinion paragraph, Section 1C of the NAIC SAO instructions. Section 1C of the NAIC SAO instructions was expanded in 2014 to apply to all companies that operate in an intercompany pooling agreement. Companies participating in intercompany pooling arrangements, regardless of their participation percentage, are required to include a description of the pool, identification of the lead company, and a listing of all companies in the pool. This listing is to include their states of domicile and their respective pooling percentages in each of the SAOs. Additionally, regardless of the company's participation percentage in the intercompany pool, each company is required to include in the Statement of Actuarial Opinion Exhibits A and B information reflective of their share. Companies having a 0% share are required to include relevant comments that relate to the risks of the lead pool member and are required to file Exhibits A and B of the lead company as an addendum to their SAO. One of the following situations may present itself to the appointed actuary. 1. An intercompany pooling agreement applies. The lead company retains 100% of the pooled business, and the other pool participants each retain 0%. Schedule P for the lead company will contain the total gross and net reserves for the pool. The gross and net reserves in Schedule P for the other companies will be 0. Section 1C of the NAIC SAO instructions and Section 6 of the NAIC AOS instructions apply. 2. An intercompany pooling agreement applies. More than one pool participant retains a non-zero share of the pooled business, and other pool participants each retain 0%. Schedule P for each company that retains a non-zero share of the pool business will show its share of the gross and net reserves. The gross and net reserves in Schedule P for the other companies will be 0. Section 1C of the NAIC SAO instructions and Section 6 of the NAIC AOS instructions apply. 3. A reinsurance agreement applies, and the company or companies cede 100% of its reserves under a reinsurance agreement. Schedule P for the company or companies ceding 100% of its reserves shows gross reserves but 0 net reserves. Paragraph 1C of the NAIC SAO instructions and Paragraph 6 of the NAIC AOS instructions do not apply. If it is unclear whether Section 1C of the NAIC SAO instructions apply, refer to the financial statement note titled Intercompany Pooling Arrangements. Read the contract itself and/or contact the regulator for the company's domiciliary estate. The appointed actuary may refer to Appendix 3.2 of this practice note for more information. Note the distinction between pooling to a 100% lead company with no retrocession and ceding 100% via a reinsurance agreement. Any reinsurance agreement with affiliates must be approved by the U.S. domiciliary regulators. The financial reporting depends on the approved filing. The regulator may approve an intercompany pooling arrangement or a reinsurance agreement, with the company required to follow the approval regardless of how a company views the contract. 3.3.2 Illustrative Language. The following language may be appropriate. The company is the lead member of an intercompany pooling agreement with its subsidiaries, DEF Insurance Company and GHI Insurance Company. Premiums and losses are allocated to the company based on its assigned percentage to the total pool, X%. Analysis of the reserve items identified in Exhibit A has been performed for all pool companies combined and allocated to the pool companies based on their pooling percentages. Any favorable or adverse development will affect pool members in a manner commensurate with their pool participation. The following is a listing of all companies in the pool, their respective pooling percentages, and their state of domicile. ABC Insurance Company, 80%, New York. DEF Insurance Company, 15%, New York. GHI Insurance Company, 5%, New York.